I usually don't talk about finances and the monetary situation of this country, but there was a bit of interesting news. The Feds raised interest rates by 75 basis points yesterday. That's 0.75% to most people, and we're now over 6% in case you were curious. Now, depending on which news source you're listening to, it's the end of the world or a big nothing burger. Well, to be honest, it's a little bit of both. When the Feds raise rates, they are attempting to make borrowing more expensive and therefore trying to slow the economy. When rates go up, it gets more expensive to finance a car, mortgage a house, or make other purchases where you borrow money, like a credit card. Yes, it is very common for credit cards to also raise rates to keep up with the market, especially if you have a variable rate. So your 19% APR could very well be 21% or more later this year. Now, those that are stupid rich, like professional athletes, movie stars, politicians, they won't care that much. However, Susie and Jimmy struggling to get by, they're going to feel this a lot harder. So you've already seen the price of groceries go way up. Gas was high, but it seems to be settling at a lower price, and rents are now averaging about $2,000 per month. That's the first time ever for an average that high. But there's good news. Since houses are going to be more expensive, prices will go down. I know that sounds like a paradox, but the borrowing is getting more expensive. It's probably going to cost about $200 per month more for the average mortgage. So the base price of the actual house will go down because this is bumping against the limit of what house buyers can actually afford. Also, banks may actually start paying interest on your money again. If you're old enough to remember, banks used to pay you to keep your money, and the rates used to be really nice. Some banks paid 5 to 7% for a standard savings account. No contract, no terms or conditions. It's still your money, and you can take it whenever you want, but they paid you. Okay, if you keep like $10,000 in your savings account, you can make $500 interest per year. If we get usable compound interest again, this will be really great to get people to save and plan for retirement. This is really good news. Some industry experts have jumped in with their opinions. Don't panic, said Jacob Chanel, a senior economist at LendingTree. What you absolutely shouldn't do in a period like this is panic and think the sky is falling. To start, Americans should focus on paying down high-cost debt and boosting emergency savings, according to Greg McBride, the chief financial analyst at Bankrate. Budget-conscious Americans should focus on protection strategies for their finances in the present economic environment, according to Kelly Levine, vice president of consumer insights at Allianz Life. That includes cutting down on unnecessary purchases. Now, these three experts have given their opinions without actually saying anything helpful or even useful. It is generally a good idea to not panic, pay off debt, and don't buy unnecessary things. That's all they said. When you go back and listen to those quotes, they're just gibberish. And that's what you get from most financial advisors. I have an opinion, and I am not a financial planner, and I am certainly not your financial planner. So don't make any changes to your life plan because of what I'm saying. But don't be in debt. If you can't buy it, you can't afford it. I also think that these interest rates are going to be hard for low-income people, and especially hard for middle-income people that make a lot of money but are still living paycheck to paycheck because they leased a new BMW or they're making payments on a new iPhone 30 with a flux capacitor. It's just garbage they really can't afford. Rates are going to continue to get raised. Don't be surprised if we're over 10% by springtime. Wages are also going to be raised in a panic move to calm everyone down. But they won't keep up with inflation. It's going to get a little messy, but most of us will get by. If you have no savings now, and are starting to panic when you're running out of money before the next paycheck, and you need to make some moves right now. If I were in that position, I would buy a crock pot and a Sam's Club or a Costco membership tomorrow. Now, sure, that's about $100, and it might be a really bitter pill to swallow. With your new club membership, buy a large pack of boneless, skinless chicken breasts, taco seasoning, tortillas, shredded cheese, salsa, sour cream, and limes. That should probably run you about $35. All right, go home. Cook all of the chicken in the crock pot with taco seasoning for a few hours. It's going to get deliciously tender. Use the rest of the ingredients to make tacos. Eat those same tacos for a few days. You'll most likely get about 16 servings of food from this recipe. Or, in other words, a family of 4 can eat 4 dinners at a cost of about $35. That's roughly $2.20 per person for dinner for almost a week. So do this 3 times a month and save all that money you have left over. That is how you start saving and getting ahead. Now you may say this is crazy and I will never eat the same thing day after day. Okay, hey, fine. This might not be for you. But keep this in the back of your mind when you're starving and you don't have enough in the bank to buy groceries. Now, CNN and other news sources are going to tell you that everything's going to be fine and don't freak out. I partially agree. Don't freak out. That won't help you at all. But start planning. I think this is going to get worse and things are going to get a lot harder. Now you can wait and see, or you can start making changes so your life is easier. So now that you have a few extra $100 every month, you're going to feel a weight come off your shoulders. See? I said this wasn't all bad news. If you like tacos as much as I do, you got to hit that like button. I have to ask you to subscribe. YouTube has really been cracking down on people with wrong opinions. Thanks a bunch. I'll talk to you later.